buying large cap IT now? For those who did not buy last week, should they chance their arm and buy Infosys ahead of its numbers?
Yeah, good morning, Nikunj. Great to connect back. Yeah, I do think that having seen a big underperformance over the last almost about 1.5 years, what is happening here is that the numbers here are not that great, but there is a bit of a stability in the earnings and the outlook that the managements are giving out. Also, Nikunj, what we have to reckon is that a large part of the Indian IT companies have a much stronger correlation with what's happening in NASDAQ. And many of the large tech companies there have seen a very smart pullback. And we think that somewhere you will find that catch up happening over here also. So I think, large cap companies, be it TCS, Infosys, HCL Tech, of course, the numbers were not that great, but the valuation comfort is pretty much in place. So I think you will see some degree of outperformance across IT names, but we think that the larger comfort at the moment is with the large caps.
Hemang, also wanted to, understand the kind of frenzy now you're seeing in the IPO market. I mean, we saw the subscription to Senco, we saw the listing as well last week, and now you have a new one, NetWeb as well. Just wanted to understand what is it that you're making of this new paper which is hitting the market.
So, good morning, Aisha. I think IPO market and the activity has also a lot of correlation with the general market and the index, which is almost at all-time high levels. And we think that, it will entirely depend upon which theme is catching up the market, what is the flavor of the season. And of course, because, some of the IT companies and some of the platform companies had given out pricing at a much, much higher level. They are also slightly more sensible in terms of what they are offering to investors. So I think overall, so far, things are looking good. I think NetWeb, I have not looked at that in greater detail, but I do think that people are looking out for, interesting opportunities in the IPO space at this point of time.
Sure. The other one is also Utkarsh Small Finance Bank. Hemang, wanted to understand what's the positioning there?
Extremely positive, Aisha. I think, what we've seen this quarter in particular is that, the banking sector has delivered exceptionally good set of numbers. Of course, past few days, it's not outperforming, but we think that given that the overall, macros are in place, there is stability in the micros. So typically, it's a Goldilocks kind of a scenario for the banks and the NBFCs, particularly the smaller companies, the NBFCs, which were underperforming for large part of last 1 year. I think there is a great catch up at play. So I think given the fact that Utkarsh is offering at a very compelling valuations and the overall growth outlook is good, I definitely think that this would make a lot of sense for investors.
Right. Last week, you couldn't take your eyes off from IT and especially how the markets were reacting to the earnings, could you? Are you also surprised by the way the market reacted to those numbers? And do you think that could be the same in Infy's case as well? Because that could, in many senses, be a game changer, right? When it reports its numbers this week on Thursday.
So, Aisha, typically, it's a classic bottom formation at play for the IT sector. We all have seen how the sector has underperformed. I think if you look at the numbers per se, there was nothing really great when HCL Tech, the numbers were quite okay. The guidance was also not great. Same was the case with TCS. So I think it's more about how much is already in the price, and people are now kind of setting their expectations for next year, versus consensus. So I think there is going to be a good amount of exciting action. You might see a bit of a consolidation, but I think from a risk reward point of view, this is one sector that still offers a lot of value, and particularly for the large cap names, given that they are also known for their aggressive buybacks, there is going to be a fair bit of stability as we see, more announcements come through.
We don't talk about it. LIC is trending up. ICICI Lombard has shot up. Star Health from 550 has become 650 almost. Is there merit in now switching out of banks and going back to insurance?
I think, Nikunj, it would make sense to have some allocation for the insurance space, because by nature, the overall BFSI space will have a higher weight. But given that there is a fair degree of run-up in the banks and insurance also has seen some traction. But I think given the fact that the incremental data points are looking much better, both for the life insurance as well as for general insurance, more so for the general insurance. So I think, maybe ICICI Lombard, the Star, those are the names where we think that there can be a good amount of action given the broad, growth macro setup that we have. And in terms of valuations, I think there is not much to worry about at this point because the sector offers a fair degree of comfort in terms of risk reward.
Avenue Supermarts. And Hemang, you track this one closely, right? I'm looking at a couple of brokerage reactions on this one. It's a hold still from Jefferies, but the target has been dipped to 3,700 rupees. And the current market price is 38.45, by the way. They're saying that the EBITDA was slightly ahead of modest estimates, but a miss on consensus. Morgan Stanley maintaining equal weight, but again, target price has been dipped to now 37.86. If there is a meaningful decline in the stock, do you recommend buying into it?
I surely think so, Aisha. I think the overall growth that they have clocked from 2023 has been extremely good. I think despite this slower SSSG growth, they have managed to protect the EBITDA margin at pre-COVID levels. And as we see the general inflation easing and the company's strategy to open larger stores compared to smaller ones would surely give them a good amount of stable growth over the next few years. So in terms of growth outlook, I think one can surely expect about 25-27% kind of a growth. So if you see any meaningful correction, in fact, the stock has already underperformed. But if you see any meaningful correction, let's say about 3 to 5%, surely it makes sense to add.
I'm just curious, Hemang, as to where your preference lies within this entire basket.
I think Zomato has been something that is doing exceptionally well for past about 4 to 5 months. I think a combination of a very strong operating performance, the management guidance about turning profitable, and the fact that they have also done extremely well. It comes to the market share. They have actually taken away about 4 to 5 percentage points in Swiggy over the last about 4 to 5 months. So I think surely the things are in favor of Zomato when it comes to the overall operating matrices. So I think there is some more upside, maybe about 100 or thereabouts. So definitely we think that in the current scenario, it makes sense to go for it.
82.5. Naresh, it amazes me. There's a time everyone said that look at tomatoes, not Zomato. Now everybody's saying that
everyone is still saying look at tomatoes because it's 150 rupees per kg.
No, but stock market folks are saying don't buy tomatoes, buy Zomato.
That's cheaper.
That's cheaper.
Yeah.
It was really the other way around. That time when Zomato was collapsing, everyone said that Zomato had become tomato. So it's a narrative.
Be it Zomato or tomato. That's the only constant in our lives.
It's the narrative which changes. See in stock market what happens? In January or February, just in and around when the Adani sell-off happened, every anchor investor who's been long-time investor in some of these fintech stocks, they sold the stocks as a desperate measure.
Yeah.
Whether it was Policy Bazaar, whether it was Zomato, whether it was Paytm, they was forced to sell because of liquidation. And that really marked the bottom. And typically bottoms are marked when the large investors who really have been long-term investors in stocks, when they start liquidating. For example, another classic case here is Aurobindo Pharma. With all due respect, Rakesh Jhunjhunwala was a long-term investor in Aurobindo Pharma. Guess when did Aurobindo Pharma bottom out? When Rakesh Jhunjhunwala, when he was there, he actually exited. And typically that happens that when somebody who's been invested in a stock for 5-7 years, when they take a structural view, until unless there is something wrong with the stock and there's no mathematics and there is no science in it, I'm simply connecting the dots here, maybe looking at data and trying to, weave a story. But when a long-term investor, when they give up in a stock, that's the time. And as long as the business is going through a temporary fall, I think the stock typically bottoms out. And that is my point, Hemang, on Delta. We've been repetitive with this stock, but some of the ultra HNI investors last week who've been owning the stock from 5, 7, 10 years, they've now given up on Delta as a story. And that's the time the stock actually has bottomed out.
Yeah, Nikunj, I agree with you that in many cases you see the bottom formation happen when there is an extreme panic or the negative sentiment around it. And in case of Delta Corp, that might be true given the this GST norms which have been put in place. The stock has corrected, and if you recall, Nikunj, this has been a high beta space. A lot of sensitivity around the government policy making, etc. But the fact remains that it's a small company, and we do not have too many options when it comes to this entire category. The gaming and the casino and all that. So I think some people will find it quite attractive at this point, given that it has corrected almost about 25-30% from the high. And I think large part of the negativity in terms of the new GST norms are already in the price. So it's just a matter of time when the F&O ban gets over. I do think that you will see a smart pullback.
Couple of other stocks, while the pre-open rates, let's just quickly mark those, are indicating a quiet start for us. That's exactly what the GIFT Nifty as well was indicating. But MapmyIndia, that was a newsmaker last week. And remember, this entire, drone GPS, Internet of Things opportunity as well is a big tailwind for MapmyIndia. The shares, by the way, have already seen a 30% uptick since the month of April early this year. If we can just bring up the 6-month chart maybe for MapmyIndia, the unmanned aerial vehicles or UAVs or drones are used to perform various activities, be it video, photography, mapping, surveillance, deliveries, even spraying insecticides. And this actually could provide the infrastructure for those mapping services. MapmyIndia spurt up mammoth in the last in the last week. And it's seen about almost a 35% surge actually in the last 6 months. Hemang, this was a fruitful IPO, and since then you've pretty much seen quite a one-way move up coming in on MapmyIndia. I don't know how closely you've read into the fundamentals of this.
Aisha, what we've seen is that of all the companies that came up with IPO, this was one of the few companies which was not making big loss. There was certain amount of profitability which was there, which was surely a bit of a comfort. Also, the fact that the product company globally, as well as some of the companies in India, have seen good traction in their overall core business and the data points which they are presenting. So I think, there is some amount of appetite which is coming back into this space. And from that perspective, this is looking quite compelling. And being a small cap and mid cap company, I think some of the AIFs or some of the, small cap, mid cap focused mutual funds also would have a liking for it. So I do think that this kind of a space provides a good short-term tactical opportunity.
Right. Okay, Hemang, great to have you on the show. We'll let you go on that note.